We're back. Rahel Solomon joining us now with those three big calls on the street today. Hi, Rahel.
Hi, Scott. So let's start with one of the best performing stocks in the S&P 500 so far this year. That would be Ford. JPMORGAN upgrading the stock to overweight from neutral on mostly a strong product lineup, including the F-150. Analysts expect that to be a strong profit driver, Scott, when assembly lines return to full speed. Ford, by the way, one of Jim Cramer's favorite stock picks of 2021. Disney, which you might remember we noted yesterday, could be poised for a major bounce back in earnings, getting an upgrade at UBS. So the price target goes to $200 from $155. UBS bullish on the company's outperformance in DTC and the eventual recovery to the park side of the business. Stock, meantime, still sitting about 5% from recent highs. And Walmart, also about 5% from recent highs, as Jefferies names the retailer a top pick for 2021. Price target here, also $200. The note essentially saying, Scott, that the retailer benefits from its physical stores and that Walmart's investments in digital and omni-channel offer strong margins. They also like the potential TikTok partnership.
Okay, good stuff. Rahel, thank you. Good weekend to you. We'll see you next week. All right, let's talk about some of these. Now, Jim, we know you own GM, right? And you still like it better than Ford. Yeah?
Yes. And the reason for that is very simple. It's the Cruise division, which is their autonomous vehicle division, that I think gives a little secret sauce to General Motors. By the way, Scott, thank you for the nice comments earlier this week. I did catch that, and I appreciate it. Back to the point, though, it's not just GM. It's Ford. It's Volkswagen. They are all coming out with a slew of electric vehicles. So I know the Tesla cult fanatics are going to be all over me on this, but I want you to consider something. When Tesla comes out with one model, it's a big deal. Those three companies are going to come out with 100 models over the next couple of years. You want an electric Mustang? You got it. You want an electric Hummer? You got it. You want an electric Escalade? You got it. The Tesla story is the wrong story. Competition is here right now. They're both good picks. I like General Motors better.
All right, I know you own Disney. Jenny owns Disney. Shan, you own Disney too. I'm coming to you.
Yeah, I mean, I don't think this call is all that radical, right? Good DTC and improvement of parks.
Yeah,
a little
late, as they say.
Disney was. Well, I mean, I don't want to be overly harsh, or punitive, but I think the trajectory for Disney has been,
That's why I'm here.
You bought this several years ago for a dividend, right? You bought this because they had great park revenue, the brand. It was free cash flow. This is a change in the investor for Disney, and I think that's an important point here. If you want to look forward, why you're buying Disney today is you're buying it for streaming. You're buying it for DTC. You're buying it for content. You know what's great about this company, though? They still have a great brand, and they still have an embedded parks business that is going to continue to deliver a very differentiated customer experience. This is just a blip. This is a great long-term stock. If you're not in it today, you should be in it for the long term because it's going to be a great holding for you to have discretionary exposure when we go back to lifestyle spend, and you get a nice kicker from content.
Jimmy, back to you quickly on Walmart.
Yeah, well, you know, it's got a lot of things going for it that Rahel listed, but I didn't hear her say is that $1,400 stimulus checks are going to have to find a home, and they're likely to find a home in Walmart's cash registers. This is just an easy, steady Eddie for the next couple of years.
Okay.